There are many reasons why we like to use central bank digital currency, or CBDC in short. It is digital, issued by the central bank, usually involves some form of distributed ledger technology, but may or may not be widely accessible depending on the design and digital infrastructure. The historical evolution of legal tender form of currency that we are familiar today is driven by technology innovation and demand. It has been a gradual transition from a physical state to a digital form today. But there are many interesting issues regarding the adoption of CBDC. Should it be positioned as M0 or M1 or somewhere in between, where CBDC functions like cash or at the same time perform the functions of M1? Should it be wholesale or retail? Who should be responsible for the technology risks and complexity of the e-wallet? What about stability, payment efficiency? What about user privacy protection, cost of management, and financial inclusion? Hello, everyone. My name is David Lee from the Singapore University of Social Sciences. Today, we are really privileged to have an esteemed panel consisting of members coming from 4 countries. They are leading the CBDC research and adoptions to answer some of these questions that I just raised. First, let me introduce our panel speakers who are very conversant with these issues. We have Dr. Vachira, Assistant Governor, Financial Markets Operation Group, Bank of Thailand. We have Dr. Hanna Armelius, Senior Advisor, Riksbank. We have Mr. Colin Powell, Executive Director, Financial Infrastructure, Hong Kong Monetary Authority. We also have Mr. Changchun, Director of Institution of Digital Currency, People's Bank of China. A very warm welcome to all of you. It is such a great pleasure to be among you. When I say among you here, we are not in the same place, conferencing from all over the world. So COVID has changed the normal communication and conferences. For central banking, we always talk about a good medium of exchange. CBDC is a clear winner with hygiene, and we can ignore the COVID virus for the time being. Allow me to start with a question to all the panel members, and please feel free to join the discussion anytime, as this is a conversation among us. So may I start with Dr. Vachira, who is out on the stage there. You have led Bank of Thailand into a very advanced third phase development of the project Internon, and plans to expand its use among larger businesses and maybe to the retail. And the question to you is, what are the motivations for exploring CBDC in your case? And more specifically, what are the benefits expected from CBDC in the future for central banks, industrial players, as well as the general public?
Thank you, Dr. Professor Lee. First of all, let me thank all the panelists to join us for the Bangkok Fintech Fair this time. I'm glad that we have something in common to share about the CBDC. First of all, let me share with you the motivation for the Bank of Thailand to explore and try to develop some CBDC. At the beginning, we believe that technology has a potential to change the future of financial landscape. That's why Bank of Thailand explore and try to develop some CBDC since 2018. The real objective is try to understand the capability of the technology with hands-on experience. Try to understand its potential, the technology potentials, to the system level as well as to the policy level, because we know that for the CBDC I think CBDC, central bank digital currency, is a big word. Some you can say about the wholesale CBDC, and some people, when we're talking about CBDC, some people thinking about the retail CBDC. So the implication for the financial stability, monetary policy, and as well as for the financial landscape has quite a lot of impact on this kind of issue. So we would like to prepare ourselves, to prepare our Thai financial community for the future of the financial system. And I think that is the beginning why we start exploring and developing CBDC.
Yes, that is very interesting. Yeah, I think there's a lot of discussion about wholesale and retail, whether the CBDC should move towards that direction. And I think, Dr. Armelius, you are involved in the Riksbank e-Kroner project for quite some time. There's been a lot of discussion about that as well. What is the Central Bank of Sweden trying to achieve with this objective? What are the benefits that you're looking for?
Thank you, Vasily, and thank you for inviting me to this interesting session. Yes, so we at the Riksbank are looking into a possible CBDC for a while now, and that started as a response to a rapid decline in cash in Sweden. So for us, we have been issuing money to the general public in Sweden for actually more than 300 years. And we were seeing that people were using less and less cash, and also stores stopped accepting cash. So we found that we had to prepare ourselves for a future where maybe cash would not be a viable means of payment anymore. And then we started thinking, maybe people are not abandoning the central bank money, but rather they are abandoning the technology that we were using. So in a digital economy, maybe we need to update the money that we supply to better suit the future. So the idea is not to replace cash, but to have a digital complement. That was the basic starting point for us. Now, the potential benefits would, of course, also be related to this. So the analysis parted from, could there be any problems in an economy where the general public does not have access to central bank money anymore? Because central bank money in the form of bank reserves is still around. So we are talking about a retail CBDC that would be available. And then when we started to think about a cashless society, we saw that there could be a few problems. And of course, the flip side of that would be that the benefit of maintaining central bank money in the economy would be that those potential problems would not materialize. So just to mention a few, there are vulnerable groups that might have problems with the technology. I mean, we know that there are today that have problems with the technology that's being offered. So if cash is not a viable means of payment for them anymore, then somebody has to supply a solution that's cater to them specifically. Maybe for the private sector, that's not profitable, and we could have some partnership there. And also, there's the issue of crisis preparedness, because cash is, of course, working offline. It's working when electricity is out, but that's not true if people have cash in the wallet. If you're already sort of a cashless society, then you need electricity to get cash out of the ATM machine. So if people are not using cash anymore, they might be more vulnerable to electricity outages and internet access, things like that. And maybe we saw that could be a role for the central bank to supply something that's capability of working offline and all of those issues. So I just want to mention, we have not taken a decision to launch an e-krona because we have sent in a petition to our parliament and asked them their opinion. But this is what we are working for bank, and those were our basic motivations.
Yeah, thank you very much. I think I can sort of just summarize a bit that DCEP is more complementary and it's a response to the increase in the use of cash. And also it's very important that everyone should have access to the central money, especially those who possibly be either digitally excluded or physically excluded. So this is what I'm hearing. I think those are very good and interesting objectives that the e-Colon project is doing. But I can move on to Mr. Pao as well, because you have been involved in the study of CBDC as early as 2017, and you also move on to the project Internon Lion Rock in 2019. What are the motivations from your angle, from Hong Kong?
Well, thank you, David. Well, first, I would like to say it's my pleasure to be invited to join this panel of the Bangkok Fintech Fair 2020 and see alongside these prestigious, panelists. Well, for the motivation for us in Hong Kong, I think the HKMA has a clear mandate of promoting Hong Kong as an international financial center. So we have been paying close attention to how the new technology would transform the landscape of the financial market. And this, study of the CBDC was very much motivated by this, fintech movement of the HKMA. And as you have pointed out just then, we started our journey like 3 years ago in 2017. We started to look at the feasibility, the impact, pros and cons, and challenges of, issuing CBDC at the time. Well, our conclusion are twofold. First, I think for us, we actually got quite a diverse and well-developed e-payment, ecosystem in Hong Kong. So basically, at the time, we didn't see a strong, demand for us to tackle the retail sector by issuing CBDC. On the other hand, we do see a potential for the application of CBDC in the cross-border payment context. And that basically leads to our, subsequent research and study, including a study with Thailand on the cross-border CBDC study. And, of course, later on, Vachira and I can talk more about that. We have completed the first phase with Thailand on the cross-border study. And we are right now preparing to progress to the second phase on the cross-border CBDC project. Yeah. So I think that's basically the kind of motive behind why we are looking at this, this CBDC solution, how it will come to be of use in addressing the, cross-border, payment, issues. Thank you.
That is very interesting because I can hear from you that it's a response to the demand for the market, especially the international financial market, players that will probably in future demand this CBDC. And at the same time, that remittance is always an issue. World Bank has been trying to reduce remittance services, especially the charges to lower to a certain level. And certainly this collaboration between Thailand and Hong Kong is something that is very interesting, and everybody is watching closely. And if it's successful, will be the model for a lot of countries to follow suit. Maybe I can move on to Mr. Mu. Your research institute was set up in 2016, and PBOC has started researching on digital currency even earlier. You mentioned one of those features that CBDC have 2 layers of infrastructure. And PBOC is the issuance of DCEP, and for those who are not familiar, is digital currency electronic payments. And at the second layer allows competition, second tier allows the competition among private enterprises to build their public digital infrastructure for the people in China. So what do you have in mind in terms of the objective of CBDC, given the 2-tier structure, and what are the objectives behind the DCEP?
Thank you, David. And it's a great honor to have this opportunity to brief the update of our project. Firstly, for the motivation of our digital currency of our country. Actually, I personally I would rather use CBDC. I think better. I prefer the digital fiat currency instead of CBDC because we are adopting a two-tier hybrid system. It's the commercial banks or the commercial entities, commercial enterprises, institutions in the second tier who are going to exchange the digital currency to the general public. So personally, I would rather use the term digital fiat currency. The motivation to have this pilot project or the research project, firstly, I think we want to safeguard the monetary sovereignty, monetary policy sovereignty of China. Because at that time, back to 2014, there were competition from the crypto assets, and after that, we got the competition from other global stable coins. So firstly, I think we want to protect the sovereignty of the national currency system, and of course, the monetary policy sovereignty. Secondly, I think we could, with the issues of our digital fiat currency, now we have changed the name from DCEP to ECNY, to issue the ECNY to the general public, we could provide a redundancy for the retail payment infrastructure, because now we have seen that people in China, they will get out, go to the street, go to shopping without a wallet with them, without any credit cards or bank cards with them. So now people only bring their mobile phones with them to use Alipay or Tenpay to make the payments. In that case, the retail payment infrastructure actually are running by the private sector. So that created a potential risks. If there is something bad happened to them, either a system outage or financial stress happen to those private sectors, that means that will bring a lot of financial risks to the whole system. That will bring the whole system in unstable status. So in order to guarantee the financial stability of the whole system, we have to provide a redundancy for the whole retail payment infrastructure. Thirdly, we wanted to improve the efficiency of the central bank payment system. Of course, before the issuance of ECNY, the People's Bank of China central bank will only provide the service to the wholesale sector. We provide RTGS system, we provide the BEPS system, and so in order to build the missing puzzle, that is the payment system for the general public, for the retail sector, we have to improve the efficiency of the central bank payment system. So the fourth, last but not least, we want to enhance with the issuance of the ECNY to the general public, we want to enhance the financial inclusion. As you may know that the whole in China, the coverage, the banking account coverage is very high, but in the poor area or remote area, there are still some people they never open a banking account. So without a traditional banking account, those people cannot enjoy any financial services from the traditional financial institutions. So in order to improve or enhance the financial inclusion, we we actually designed a system of the ECNY to loosely coupled from the traditional banking account system. So people can open a digital wallet without opening a traditional banking account. In that case, in that sense, we could improve the financial inclusion. So those are the motivation behind our ECNY project. Thank you.
Yeah, thank you very, very much, Mr. Mu, because it's very interesting that China is responding to the needs of the market and also competition from some of these stable coins that we will talk about later. But generally, I think you were talking about the retail ecosystem, you're talking about efficiency of the payment system as well as financial inclusion, very focused on servicing the market and serving the underserved. And that is something that I think is very special about this in China as well in many of the countries that are looking into CBDC. But there are also other issues that I think we need to talk about. And that is where I think I want to go back to Dr. Vachira, because in the context of all this environment ecosystem of increasing digitalization and a gradual decrease in the use of physical currency, and the issue of convertibility of the commercial bank deposit currencies into CBDC and vice versa is the most important for maintaining public confidence. This is only one issue. So I want to ask Dr. Vachira, what are the implications of CBDC on central banks' mandate on financial stability, on monetary policy transmission system, and also on the relationship with the financial institutions? Are there any major concerns in this area while we are studying the CBDC?
Thank you, Professor Lee. First of all, as I mentioned earlier, for the retail CBDC, there's quite a lot of questions, a lot of concern, whether is it going to have some impact on financial stability if a central bank issue CBDC? What is the role of commercial banks? And if something happen, for example, if there is some risk-averse environment, will people just go through just only CBDC, central bank digital currency, and then how is the bank? So it's the issue of financial stability and the issue of monetary policy transmission. What's the implication is whether if the central bank issue digital currency, what does it mean? Can central bank pay interest rate on that? So it's quite a lot of issue on the central bank digital currency on monetary policy, as well as on the financial landscape. What is the role of the intermediaries? If a central bank issue digital currency, is it mean that central bank directly involved with the retail, and then where is the intermediary? At the moment, commercial banks are the ones who do the, how can I say that word, asymmetric information for the lending for us, for the system. So there's quite a lot of concern about financial stability, monetary policy transmission, as well as the financial landscape also, when we are talking about the retail CBDC. And then I think that's why when we start exploring the project of central bank digital currency, we start with the wholesale CBDC first, because that one we said that okay, let us explore the capability of the technology, whether it can help or whether it can enhance or it can replicate something, enhance efficiency of the payment system. That's why we start the project with the wholesale CBDC in the Intranon project. We also would like to use this opportunity to prepare our financial community to start thinking about this, and then to start prepare themselves for the future of the financial system. That's why we also invite 8 commercial banks, 8 Thai commercial banks to join us to do the project of the wholesale CBDC. And we divide it into 3 phases. And for the first phase, we try to replicate our core payment system, the RTGS. And then for the second phase, we add some function on. For example, we use some smart contract to do whether it can check AML, CFT. We also doing the test of the asset life cycle, bond life cycle into that. And then as well as we also do the data reconciliation for the payment. And on the third phase, we think that the cross-border fund transfer is quite an issue that people have pay attention on, because at the present, the cross-border transfer is costly. So we try to find some partner, and then fortunately, HKMA, Colin, agreed to join the project with us. So Bank of Thailand and HKMA jointly explore possibility of doing the cross-border fund transfer between Bank of Thailand and HKMA. So it's a baht and Hong Kong dollar. And then to see whether it's work well, and then it can service the cross-border fund transfer. And then one thing that we do is that in our model we can reduce the role of corresponding bank for the cross-border fund transfer. For these 3 phases, we can conclude that the technology can handle the payment function well, but there's still quite a lot of limitations about the speed and then other legalities. So, but for the speed, we think that for the technology, for the limitation of the technology, we think that the speed of technology will solve this issue, in the near future. So we are not worried about that. And then, now we are focused more on the retail, whether this CBDC can serve for the corporate and for the retail. That's why this year we start a small project, cooperate with a corporate, Siam Cement Group, to try to see whether CBDC can serve corporate on the supply chain, and then to see the needs of the corporate if we really use the CBDC. As well as this year, we are still continue working with HKMA to do a deeper understanding, to study and then try to find out how we can better doing the cross-border fund transfer. I think this one, I leave it for Colin to explain a little bit more on that.
Yeah, thank you very much. So you can hear very clearly that Thailand has a very clear program of working with the intermediaries, focusing on the role of intermediaries, especially in trying to work with some of the established and experienced organization with a lot of talents, and then moving from big businesses to corporates as well as retail, followed by cross-border. It's a very systematic approach I'm seeing in Thailand, and I see a lot of cross-border collaboration going on between Hong Kong and Thailand, and possibly a lot more. So I'll come back to you, Dr. Vachira, but I want to go to Dr. Armelius, because we can, from all this discussion, we are seeing that this historical trend and the demand for currency development is pushing all the central banks in responding with innovation within the banks, and then spill over to some bigger financial intermediaries. And CBDC is one way that the central bank is responding to the supply side to digital transformation of the economy, which we all can see in this industrial revolution. So clearly the balancing act and facilitation become more crucial, especially for those established financial centers in Europe, US, especially because there's the speed of transmission in the virtual world is a lot faster. So what are the concerns that you may have, especially back in Sweden and Europe, about this very high speed of virtual remittances and virtual transmission?
Hello, I am sorry. I lost you a little bit there.
Yeah.
I think I didn't get the question.
In short, my question is, are there any concerns from Europe about CBDC?
So we are discussing the concerns, potential problems with the CBDC.
Yes.
Yes, okay, sorry. It's this trying to work virtually. We're all doing our best. Yes, so I think there are potential problems, of course. I mean, we have done some research on this, and I think more probably needs to be done. But as far as, I mean, just to give you the quick view, we see it as I guess it will depend on the steering system from each individual central bank, but at least with the steering system that we have, the transmission of monetary policy would not be a concern with the retail CBDC. We would still be using the same corridor system. So that's not really an issue. The only issue for monetary policy would be that if we issue a CBDC with a zero interest rate, then of course that would be the floor. And Sweden has had negative interest rates for a few years, and we think that worked well for us. So of course that would be sort of limiting the monetary policy toolkit in a sense. Now, I guess the greater concern and what's still sort of an open question that needs more research is the impact on commercial banks. And I would just say that sort of go back to my starting point here, that we view a CBDC not as something new and revolutionary for the financial system, but rather as a way of maintaining the different roles that the central bank and the commercial banks have had for a long, long time in Europe, hundreds of years. And that entails the central bank having a small presence in the market. And if the presence does not become too big, then you can sort of view CBDC as playing the role that cash plays today. So for instance, in Sweden, cash as a percent of GDP is around 1.5%, whereas in Europe in total, it's around 10%. So that means that the money that the people have in cash is not currently in bank accounts. And of course, the difference is quite big between 10% of GDP or 1% of GDP, but commercial banks can still do their business in Europe, right? They can still lend money and the impact is not too big. So if Sweden had a small presence of CBDC, maybe the Swedish financial landscape would just be more similar to other countries. We don't really view it, as long as you can contain demand for CBDC, the impact on the financial system should also be contained. So it's basically a question of how you design the CBDC. If you design it in a way that it does not become too much of a competition for the banking system, the impact should not be that big. And that also includes having some sort of mechanism that could curtail a possible run into CBDC in case of financial difficulty. And that would include having some sort of caps, perhaps, on daily transfers or negative interest rates or fees. But in the end, the devil is in the detail, since it's a matter of demand. If you can just contain demand, you should be able to contain the impact. And what we are trying to achieve is just a continuation of the way that the market has worked for a long time. We sort of don't view the revolutionary thing as implementing a CBDC. The revolutionary thing would be a cashless society where the central bank has no presence at all. Now, having said that, I think that the way that the Bank of Thailand, for instance, is working is probably the right way to go. I mean, since it will be impossible to know exactly how the financial system would react to a CBDC, it's probably good to consult with a business, to take small steps forward. This is also what the People's Bank of China is doing, of course. We do pilot projects and like maybe start on a small scale and definitely engage with all of the different players in the market to just sort of gradually find this out, because until we do it, we won't really be able to know exactly what the impact should be.
David, you've mute. You're on mute.
Okay. Yeah, I think thank you, Dr. Armelius. I hear keywords from all the speakers: complementability, fairly intermediary focus in balancing, and systematic way of introducing CBDC and the design behind it. But I want to talk to Mr. Pao about the technology risk management. Hong Kong is international, and the infrastructure support at the intermediary level, because that Hong Kong is leading the world as a financial center. And what about also the adequate supply of talent in the digitalization? Because Hong Kong is probably at the forefront. Are there any concerns in those areas or other things that you may have?
Thank you. I read that you are referring to the talents part, right?
Yes. Yeah.
Yes. Yeah. That is a real issue. I think over the past few years, a lot of research, have been done on CBDC by different, authorities, and we now have a pretty good understanding about, what are the pros and cons, what are the limitations of it, and it all depends on the design features of the CBDC. Well, I'm glad to see that actually we start to see, central banks moving out of this conceptual stage, now moving into a more an experimental or even implementation stage of the CBDC. And so now we do have a good collection of real issues that we are facing. And what you've just mentioned about talent is certainly one of the key issues. And of course, it is important to nurture talent, to develop talent, so that we've got the right minds and right people to help develop all these solutions. But that's just part of it, I believe. And when it comes to, for example, we are now working with Bank of Thailand on the second stage of the, cross-border CBDC project. We also come to aware of all the real technical issues. For example, about system performance. For example, about scalability and the resilience of the technology. There are all the real issues that we have encountered, and we are starting to look at those. And hopefully, through this, more in-depth research, we will be able to provide genuine solution to help turn, these, CBDC concepts into operable, solutions that can really help address the cross-border payment issues. And having said that, I fully agree. Talent is a genuine issue, not only in Hong Kong. I believe in all the other different, financial centers, wishing to, make progress on the fintech front. And for us in Hong Kong, apart from, facilitating or promoting fintech development, we actually have been working with the universities, working with the industries on how to develop talents and, in a way, also how to retrain our existing practitioners to equip them with the, fintech skill sets.
Yeah, thank you, Colin. I think, Mr. Pao, I think you give a lot of comfort of where we are heading in terms of intermediary training and so on. But I want to go to Mr. Mu, because yesterday I heard that the DCP, or what you call the DCP, will not pay interest. Are there other concerns? In my mind, there are a few things like, how about the quota for the DCP, because we know that we need to transfer. How about the technology risk management standards? Or I think Mr. Pao talked about capabilities. What about the the management of the digital wallet? Are the central banks going to involve in the setting of the standards? Are they going to involve in trying to set the quota for each bank, CBDC, and also who is going to manage the development of the e-wallet?
Sorry, because of the echoing, I could not hear very clearly. If I understand correctly, your question is regarding about the quota, the technology employed, and also who is going to develop the digital wallet. If I hear you clearly, correctly?
You got it all.
Okay. I'll go through all the questions one by one. Firstly, the quota that will be decided by the central bank, the PBC, but the quota is not a fixed quota. It will be based on the demand from the general public. So actually, that quota is only will be decided by the demand of the general public who are going to exchange their deposit into digital currency or ECNY. So it's not a fixed quota, but of course, in times of stress, if something bad happened to some financial institutions, including the small commercial banks or rural cooperatives, there may be a background happen to some institutions. In those circumstances, definitely the withdrawal digital currency from or ECNY from those financial institutions will have to comply with the regulations on cash. They will observe the same cash regulations. That means if you want to exchange large amount cash from some financial institutions, you have to make an appointment for those frequently or large amount withdrawal of ECNY from a financial institution. You have to, maybe some you have to pay for pay fees for those exchange, large amount exchange and frequent exchange. So that's the answer for the quota question. For the technology employment, because we adopted a hybrid system, a two-tier system, and the second tier, all those financial institutions and PSPs and telecom operators, they are free to choose any technology they want to use, as long as they can meet the requirements, minimum requirements. For example, they have to meet the requirements of a retail system, because we have a very big population, and you have to realize the capacity like 300,000 TPS for the capacity of the system, or you cannot meet the demand from the retail transactions. Yeah. But for the, I think most of them actually, because to meet the requirements, the minimum requirements of the technology, most of them actually adopted the centralized system, like the traditional payment system, although they can use distributed database for their transactions, but not the DLT technology in the retail sector. That's our technology path choices. For the universal app for the ECNY, in order to prevent any fraudulent cases, we develop all the participants, including the authorized operators, including the big banks, the PSPs, and the telecom operators. We jointly developed a universal app, digital currency app for the whole country. So that app actually have been developed of the institutions, the authorized operators, by the operators and for the operators, and also for the general public. So that's the update of our digital currency, ours East and Y. Thank you.
That is very interesting. I think China is moving very fast. A lot of us are trying to catch up. It's very good to hear today that there are a lot more things happening, especially at the development of the wallet and also setting the standards and interoperability. I open this question to all the panel members. So, in your view, CBDC be a silver bullet to curb private digital currency, or would they complement each other? Are there any fear of monetary sovereignty will be reduced? Are they going to be coexist? The CBDC, the silver bullet, the privacy, the private digital currency? It's open to any of them. Maybe I can start with
Professor Lee, maybe I would like to add some. At
Thank
first,
you.
I would like to support what Hanna has mentioned earlier, that although I also mentioned earlier that there's quite a lot of concern on the retail CBDC, the three concerns: financial stability, monetary policy transmission, as well as the financial landscape. But I think what Hanna has mentioned is quite correct. It's quite important that it's depend on the design of CBDC. What did we decide? We can, because if we're looking at the CBDC as some building blocks, so it's if we decide in some way, it has some implication. But so if we have all the concern, and then we can use this kind of building block and then to set up the system. And then I'm glad that when I learned from the Riksbank and PBC that the retail CBDC is like digital banknote. So it's just only bank. And then Mr. Mu is mentioned about the limitation of how much each can have, although there's some difference from each person, but at least there are some limits. So it's mean that the scope or the implication on the concern that we have, can be mitigated. And this it means that if you use it as just only the digital banknote, it means that it will have similar to the banknote, but maybe it will be better because it's digital. So you don't need to carry all the banknotes, but there's still some implication. And then going back to you mentioned about the silver bullet. So it's depend on the design whether. I don't know, but maybe Mr. Mu can help in your design on the PBOC. If the design is just only digital banknote and then you just design it to be just only the basic banknote, but I don't know whether you will let the private sector to add on some feature or on these digital banknotes, or you treat it differently. So it's depend on the design. And then this one I would like to learn from maybe from the three of you also about this.
Yeah. So anyone else would like to add on? I think that's a very good point that it's all the design behind the CBDC and whether it's 2-tier or maybe 3-tier or 4-tier, that there's a lot of participation from the private digital currency is still to be seen. But anyone would add on? Mr. Pao, you would add on?
Hi, David. Yes. Well, I think on this point about whether CBDC would be a silver bullet to curb private digital currencies, well, I suspect that as central banks, we do not have an objective to curb, private digital currency. That's because we actually kind of, welcome innovation. We welcome the private sector to come up with innovative products that can better address customer demand. I think our concerns mainly fall on the risk. There are all sorts of risks on surrounding these new products, consumer protection, financial stability, AML, etc. So I think, yes, at the end of the day, the CBDC may have some sort of similar function with the private sector provided, digital currencies. But all along, I think our objective is not to hinder or to prevent them from development. Rather, we probably want to see there is a healthy kind of, coexistence between these two types of, new species. But of course, I believe that the kind of, development has just started, and we are yet to see how these two will be in competition, or they can, kind of, in support of one another to address different segments of the market. If you ask me, I think given the, for example, the pandemic situation over the past years, and also the increased attention of the international financial communities on cross-border payment, there may be quite a strong push right now to accelerate the development of CBDC. And at the same time, of course, we all understand the private sector is looking at it as well. And so let's see what will be coming out of this process. And hopefully, we can find a balance that we can coexist, rather than it's just, it's not really a competition, if you ask me. Thank you.
I think that's a very good viewpoint, because throughout history, there have always been some private currency ongoing that the central bank will continue to innovate and serve the market to ensure stability and also to ensure inclusion. We are running out of time. I only have one last question for any of the panel members, which I think Mr. Pao, you mentioned about COVID-19 may be one of the reasons that there will be trigger point for the launch of. Can you think of any other reasons that you consider to be the trigger points for the launch of CBD to mass adoption globally? To any of these panel members, any of you? Mr. Mu, or would you like to?
Thank you, David. For the are we still on the question of silver bullet?
Yes. I'm more in terms of the
okay.
mass adoption.
Yeah. Okay. Well, personally, I because as I said, the first answer to the first question is to safeguard the monetary sovereignty. So for me, for those private digital currency, they are the bullets. We just want to build a strong armor. So it's not to kill them; it's to just preventing they are killing us. So that's my view on this digital currency thing, private digital currency thing, and of course in China, and there's a lot of controversial questions regarding the eCNY or the central bank system versus the payment service providers, especially because in China the Alipay and Tencent Tenpay is quite powerful, and they actually already dominated the whole market. People are afraid that this eCNY is created to be a silver bullet for the PSPs, private PSPs. So here, I also want to reiterate that the eCNY is only the digital version of RMB, and it's legally the fiat currency, same as the paper and coin version of RMB. So the e-wallets of Alipay and Tenpay are actually private payment infrastructures. Before the eCNY, the payment service providers, including Alipay and Tenpay, they are providing e-wallet services with commercial bank deposit money. And with the issuance of eCNY, Alipay and Tenpay, they can also providing e-wallet services with central bank money. And because they are also chosen as the authorized operators of eCNY, so in the era of eCNY, Alipay, and Tenpay remain, and all those PSPs, they will remain as the wallets or payment infrastructure providers. And with the eCNY, we just provide a redundancy and also a stronger system to the whole retail infrastructure and provide a stronger armor against those global stablecoins or crypto assets. Thank you.
Sorry, sorry, Professor Lee, I got the message from the floor that we have only 5 minutes left.
Okay, yeah, maybe Dr. Vachira, do you have anything to add to that?
On issue, or if I just conclude that I think that CBDC is a journey for all of us, and so I think we learn and then we try to explore, and then I think at this stage, all the central bank we share our information or what we learn from each other, and I think it helps, and then this is the foundation for us to do the I don't know, I think we can call the infrastructure for the future. I think that's all I would like to say.
Right, that's good. Dr. Armelius, would you like to say a few words because we are running out of time too?
I agree. I think interesting. We are learning, and of course, the private sector is rushing ahead, and central banks are not known to be very speedy. We like to be cautious and take time, so we are doing the best we can here. And thank you for inviting me.
Yeah, thank you. Yeah, maybe since we are running out, the central bank function is, I think, a lot more interesting. Well, from what we hear today, the most important function and very basic, maintain the status of the legal tender and the right to issue currency. And the second point is the efficiency of the system, and also to enhance the of the monetary policy. And thirdly, to maintain financial stability. I hear from the panel members, I think everybody will agree. But the more interesting thing is that it's become more complicated and more complex now. This the fourth point is the most important in the sense that the post-COVID period, I'm hearing with unprecedented imbalances as well, there's a need to reach out. And the fourth point is that we need to build this new digital infrastructure to meet the demand of this new economy in this fourth industrial revolution. And meeting the challenges of technology innovation, protect against consumer, as we didn't have time to talk much about our consumer privacy invasion, which I think China has a lot of data centers to be set up. They have a very good plan about protect privacy invasion and having a very set systematic way to do it. And finally, improving the social welfare, which I think again from all the countries here, especially those excluded from the financial system for long-term growth and stability. So the fourth point, I think all the panel members, and I think I hear from you, is exactly the same we have discussed today. So with that, I'd like to thank the Bank of Thailand for inviting me to share with all the panel members. Especially, I want to thank Dr. Vachira. I want to thank Dr. Hanna Armelius. I want to thank Colin, Mr. Colin Pao, also Mr. Changchun. Thank you very much for joining us, and thank you very much, panel members, for a very exciting discussion. I think everybody have heard today, and I think it's very positive for the development of CBDC. We look forward to more updates from all of you, and we'll be monitoring very closely the market of what you are doing. So with that, I end today's, and thank you very much, and I hand over back to the organizer. Thank you, everybody.
Thank you.
Thank you.
Thank you very much. Thank you.
Thank you.